Okay, good evening everybody and welcome to this week's live market analysis webinar. It is such a pleasure to have you here, to have the opportunity to chat with you about the markets. Let's do the disclaimer before we get started, which says that everything we're going to discuss today, disclaimer, there it is information only. It has not taken into account your personal financial circumstances, particular needs, objectives, all that sort of stuff. So before you act upon it, it's really important you consider it carefully in light of those factors, or seek professional help as to its appropriateness for you. The other thing that's very important is to understand that trading is risky, investing is risky, markets go up, markets go down, they may not go the way you wish, and you could lose money as a result. It's important to remember that everything we're going to discuss today, or anything you do as a result of that, it's always your decision, not mine. So it's you that's responsible for everything you do, not me. Apart from that, obviously, get your requests rolling. Any chart on any stock, commodity, bond, what else is there? Crypto, anything you can think of, I'll look at it and I'll give you my best technical analysis reader, or otherwise you may wish to ask me anything from the world of trading. So methodology, money management and mindset. Let's just on that note, I'm going to head over to here while those requests are coming in, and I wanted to point out, for the benefit that people that haven't checked the Twitter today or don't follow me, that's cool as well. But I did put a very important tweet up today. It's this one here, and it's not hard to find. It's about 3 or 4 down. And it came about after somebody, well, there were 2 people in one of the threads that I had tweeted, and one was kind of having a crack at the other person for having made a very bad call. It was about a particular lithium stock that didn't go the way that person had called it. And, maybe that person was in love with that lithium stock or whatever in the past. Who knows? Not that it's relevant. But the bottom line was that, I just don't think one trader having another crack at another trader is necessarily all that productive. And on behalf of the person who was getting a crack directed at them who had made a mistake, I thought, I thought, how many mistakes have I made? And if somebody had a crack at me for all of my mistakes, I'd be in big trouble. And 100 times 100 times 100, I don't know how many millions that is, but I guess it's a 1 with 6 zeros, so it's about 1 million. 1 million mistakes, at least, over the last 30 years that I've been investing. But been very fortunate to learn just a few things that will help keep you on the right track. Number one, only trust the price. Demand to supply equals price. Narratives are going to take your capital away from you. As soon as you start believing in narratives, you might as well say goodbye to your money. Follow the trend. You don't need narratives. If you have the trend, you'll understand what the exciting narratives are by simply following the trend. You don't have to be all in and all out, something I teach you every week. That's why we have our 1/3 in model and 1/3 out model. And doesn't it feel good sometimes, isn't it? After you sell something and it goes straight back up, knowing that, geez, I'm glad I only sold that third. Because it's going to happen to us, or inevitably when we buy in a third and it goes straight down, we think, geez, I'm glad I only bought that third. You always add to a winning trade when you get the opportunity, obviously, and never, ever, 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 never 100 times 100 times 100 add to a losing trade. Just don't do it. Some professionals in my industry call it dollar cost averaging. I call it stupid. Number 5, never bet more than you can stand to lose. If it hurts, if that last trade hurt you, you bet too much on it. Bet less next time so it doesn't hurt. And then, you know what? All this, look, I have to be careful what I say because a lot of people out there believe that the mindset, we talk about the 3 M's, methodology, money management, mindset. So many people believe the mindset is the most important thing, and it's an easy sell when you come to trading. Look, I've done this in the past in a previous life where I sold trading workshops, and you tell the people in the room, look, the reason why you're failing is because your mindset. And they go, you know what, Carl, you're right, because I can't control my emotions. You know what, you get number 5 right, and all of those emotions just melt away, because ultimately it's our attachment to that money, wanting more of it, hating to lose any of it, which causes all of those mental challenges we face when it comes to trading. So number 5 is possibly, probably the most important thing. To be fair, actually, it is, because it doesn't even matter how you get in and get out. As long as you've got that money management part of it right, you're going to be fine. The future is unknown. This is my trading psychology. These last 2 points are my trading psychology. Okay, if I was to write a book on trading psychology, it'd be 6 and 7 long. Number 1, the future is unknown. So stop worrying about it. There's nothing you can do about it anyway. Once you place that trade, or if you don't place that trade, Nothing you could have or didn't do will change the outcome of it. Shit is going to happen, and it's going to happen to you, I guarantee it. But it's not personal, okay? The market gives zero ducks about what you think and who you are. It really doesn't care. It's non-discriminatory in that nature. Isn't that wonderful? So suck it up, princess, and get on with following rules 1 to 6. Keep calm and follow the trend. Bookmark that, print it out, stick it somewhere. You do your analysis, because I'm not kidding. It took me years to learn that stuff and to learn how important it is. And my job, I feel, is to hopefully help other people, I don't care who they are, just not take as long as it took for me to learn that stuff. And that's why I do the stuff I do. Okay, let's go now to the AMI broker screen. And what I'm going to do is the whip around the grounds first. And let's start off here with the Nasdaq. Last time I think we said we were moving back to a two-thirds position. We didn't have to rush there, I think was the other message. We'll get there when we get there, because the market is a little bit choppy at this stage. Nothing in the chart tells me that we have to change that strategy. Okay, so status quo, nothing to see here. We're still moving towards that risk management level of 2/3 of our portfolio invested, and happy if you got there this week, for example, because there's really nothing there to suggest that this trend can't continue to perpetuate in an upwards direction. Short-term trend is good. It's light green zone, dark green zone is doing its job. We're higher peaks, we're higher troughs, candles are predominantly white, and we're having very shallow pullbacks when we do. We are obviously stagnating here, aren't we, at 16,539. No surprise. We know how to read charts. There's supply up there. There's supply up there in the past. There's going to be supply up there in the future, partly because there was supply up there in the past, and also because there was lots of demand in the past. So lots of demand, they got belted, didn't they? Price goes back up to their break-even point. They feel that some of them will feel that they want to get out there, and that creates latent supply in the market. We need to work with that supply. The demand side, we've talked about the evidence of the demand side. That's the high peaks and high troughs. That's the predominance of white candles. That's the trends. That's the dynamic support. We've talked about the demand side. They need to deal. They need to contend with that supply side. And when and if they do, we don't know if they will, then we will break 15,539. And that will then become an area of demand going forward. So pretty happy with that. That's where I like to start. I like to look at the Nasdaq as my portfolio management indicator. Now, and then I go around the grounds to see is there anything to shake me off that idea. Looking at the Russell, I don't like Friday's candle. You're probably looking at that going, that's annoying. It's frustrating, 2084. We expect there to be supply there, and there is supply there. It's annoying. But there's still enough of, we're talking about on balance. We're talking about, give it a score out of 10. That certainly takes a point off, doesn't it? But the rest of it's still okay. What we don't want to see is more supply tonight, and this area around here developing as a significant peak beneath this top one here, which I haven't labelled it, but it is 2135-ish. So hasn't changed my view. Let's keep moving, but it's something to keep an eye on. That's fine. Hunky-dory there. But we know the Russell means more than the S&P 500, don't we? Let us head over to Europe. And we actually saw some record highs, some all-time highs printed last week. So that's good. We're looking for the coordinated risk on. We want to see risk-taking all over the world. People happy to put their money at risk in the markets. That's the French market. That's the German market. That's the one that made that all-time high during the week. Looks amazing. Euro Stoxx 50, we'll take a few from all around Europe and shake them together. And the FTSE is going gangbusters at the moment. No complaints there. And Spain is fine. We're just looking for red flags here. No red flags here. Hang Seng, we talked about this one turning the corner, turnaround setup. Great price action. Great candles there. No complaints. The Nikkei was a bit in the doldrums, and that hasn't changed. It's funny how leopards don't tend to change their spots too quickly, do they? The Nifty 50 is fine, but looking a little bit shaky up there. That's a lot of black candles up the top. The Shanghai Composite is still okay, heading in that changed trend direction, so we're fine there. And we were going to head next. Let's bring it home to Australia. And we're kind of, we're an amalgamation perhaps of some of the best and some of the worst charts, which leaves us stuck in the middle. We're a bit more like the Russell 2000, aren't we, than say the S&P 500 or the German DAX. But I think we're okay. I haven't moved my little lines and zones around for today, but I suspect that went back to green. So let me change it. So it's still a sliver, but give or take, just to show where the dynamic demand we expect will come in. Obviously, the dark green zone is doing its job perfectly. I mean, I cannot script this. I don't make it up. I don't make the charts, I should say. That's just 74.92. Bang. 78.15, above that, we're looking very good. And white candles in and around 78.70, we're looking excellent. And I would expect us to go up and make our own record highs if that would be the case. I don't want to see us trade beneath the short-term uptrend ribbon. Okay, that would be good. Let us keep moving. I'm going to head to stuff that I know updates here. Not all of this stuff updates automatically via Norgate data. Some of it needs to be updated manually, and I haven't done it. Many of these since I stopped working at Think Markets because I just don't need to anymore. I go to TradingView, as you know, for many of them. But we will head over here. We will look at our base metals charts over there on the London Metals Exchange. And that looks okay, doesn't it? We saw it come back into the zone last week. It's there. It's bouncing off the zone. So short-term uptrend ribbon doing its job. Copper bouncing back up on Friday. That looks fine. No complaints there. We're still high peaks and high troughs. We're seeing a little bit of compression. Why is the compression there? Because there's a big round number. We're compressing beneath the big round number. And we've got traders. It's just psychology, isn't it? Oh, I don't know. 10,000 is a bit expensive. Maybe I won't demand as much, or maybe I'll supply a little bit more. There's still plenty of demand in the system, but it needs to work through that psychology of 10 grand, and once we're through that, it'll have an easier path. I don't expect it'll be a major issue because it's not our first rodeo at 10,000 for copper, is it? Let's head over to nickel, which we said was trying to change its trend. It's still doing that now. Hasn't changed the trend officially yet. I think, above here, whatever that is, 19,180, prints like a 19,250 or something. Closes, I should say, not prints, closes there. Having said that, it's prints, isn't it? Because it's an afternoon close. So by definition, a print is a close. So if a print's 19,250, that is a new long-term uptrend in nickel. That's why it's important. Heading to lead, fine. We're looking for red flags here, canaries in the mine shaft, that base metals are no longer in high demand. And that's obviously going to have an impact on our local mining companies, of which we love to death, don't we? Have got a portfolio full of these little mining companies. So that's why that's important. We don't have many lithium stocks left over too, except for one. Which one is it that I reckon some people probably took a little bit of a nibble at last week? Is it Latin Resources, or is it the other one, which I said I liked? I was a bit warm on Latin Resources, but it actually did go quite well, didn't it? I'm saying too much here. Let's talk about that. Nothing happening here. In fact, if anything, it looks like the supply side is very much in control, and we are getting the bounce along the bottom scenario, which I did predict, because I just felt that with such a massive and such a consistent decline there on the weekly chart here, I just couldn't foresee a V-shaped recovery, and they're all the same. Let's head over to spot gold here. We are on the weekly chart. That's actually silver. Spot silver, let's go to the daily chart. Vibrating within some well-defined ranges there. Friday's candle was disappointing because Thursday's candle was amazing. I really thought that was getting ready to break through. Friday's candle is going to stop it in its tracks for probably a couple of candles. It could stop it forever, but more likely a couple of candles at this stage. And then we're just looking for the white bodies and the lower downward pointing shadows to tell us demand is kicking back in, probably at that light green zone, to have another leg up. Plenty of silver bugs out there believe that the next big squeeze is coming. Hey, I don't know. I'm not that kind of person. I don't do narratives, but I do charts. And look, the demand side is in control at this point in time, as it is for gold. But I have expressed my trepidation, haven't I, about gold and some of these candles that are happening up here. And let me make a new pink zone up here, because I do think it deserves one somewhere around about there, up to the top of that shadow, and really probably up to Friday's shadow there. So we're in an interesting point for both of those. Let us head over to the trading view screen here and finish off our whip around the grounds. We're going to head over to bonds now, and we want to see obviously this chart go down. If we want to see the price of money get cheaper, we want to see this is an opportunity here to invest risk-free. How good's that? I just talked about the desire, the coordinated global desire of investors to want to take risk. This is the exact opposite of that, ladies and gentlemen. That's how the two pieces of the puzzle fit together, because when this was pushing up through here, we know stocks were really struggling, because this represents not a risky bet, it represents a risk-free bet. And look at the yield you're getting on it, or at least you were close to 4.8% risk-free for 10 years. My gosh, that is a very, very attractive yield, and it makes stocks on a relative basis look pretty lousy. But we've seen a bit of a pullback here, and that's given stocks a bit of impetus to go higher. Let us have a look at the Japanese government bonds. They are creeping back. That's not great there, is it? But doesn't seem to be having a big impact elsewhere, so we'll take that one with a pinch of salt. And Aussie yields have come down just like the US ones, and that's obviously helping us. I'd like to look over here at these Chinese indices, because the charts are sometimes a little bit different. At least we get the property indices here. I don't have those in Norgate data, and they're turning the corner as well. So it's HSMPI, the Hang Seng Mainland Property Index, and it actually looks like a turnaround trade now, doesn't it? And what was that one before? That was the Mainland Real Estate Index, not as good, but also trying to turn the corner. And this is the H shares of the property index. They're also turning the corner. So it's not just the manufacturing and the other industrial companies. The property sector's starting to catch up, and that is why the Hang Seng is taking off. Let's have a look at the two US banking indices now, because this is what created the huge crisis just over 12 months ago, and it's not a crisis now. We're out of the woods officially. We're not. Oh, okay. Well, I was going to say we're not going to have another US banking crisis. We just look at the big banks. Now we're looking at the small banks, and they're nowhere near as good, isn't it? And this is how the market works, ladies and gentlemen. It's just supply and demand. It tells you that small banks are still risky, or riskier than their bigger counterparts. And well, duh, we knew that, right? But no, I don't think there's a red flag there to concern ourselves with. I didn't mean to do that, but let's head over to, where am I going? I'm going here, to the commodities now. I wanted to check out high-grade copper for you, which looks hunky-dory, stairway to heaven there, no complaints. If we head out to the weekly chart, we're going to find that the next point of supply is, we're kind of, yes, we are working, that's the one we're working through now, not up until above 5. So we should have a 5 handle before we really hit the next area of supply. And then up here, it's gone under there. I can't see what it is. So let me change some settings here and tell you that it's about 521 after that. So copper looking just fine. Let's head over to the iron ore chart now. And that's just fine as well. We're seeing the manifestation of supply at the long-term trend ribbon. And I see certain people tweet. There's a certain person that's quite interested in iron ore, and they talk about the 50-day moving average, and they talk about the 200-day moving average, and I just have a little chuckle to myself, because they're completely irrelevant, those moving averages. What is relevant, of course, are my moving averages here, because you know that to be the case. And we can see that the supply that is manifesting itself here is because of my trend ribbons, obviously. I mean, why else? Everybody uses my trend ribbons. Everybody who matters, that is. Look, that's bullshit. I don't know that to be the case. Right. I'm just assuming it based on the fact that they are pretty good. But we are seeing some trepidation here, obviously, with the prevailing short-term uptrend. But the candles there, you can see how the short-term trend is doing its job of providing dynamic demand, while the long-term uptrend is doing its job of providing dynamic supply. And you're going to get that little battle, aren't you, from time to time, naturally, when trends change. I like the candle from today. Another white candle will set, I think, this area as demand, and we will push through 120. And where we go from there, who knows, 128-ish, 130-ish, I don't know. Who cares? But it's probably more likely to go up than down. If you're a fan of iron ore, looking at uranium, that had a big dip. I know a few uranium stocks got a bit hit today, and that's probably it there. Ladies and gentlemen, that last dip down, we don't want to see that. We want to see V-shaped recoveries. We don't want to see bumping along the bottom. So March, I know that's not the bottom, it's the dark green zone, but it's still bumping and it's not V. But okay, for now, we'll just give that a little bit of leeway, I guess. Let us head over to natural gas, which I did see a small rally there, but nothing to get too excited about. Let's check out the energy complex while we're here. So we're looking at, it's called the energy complex. So we've got natural gas, we've got heating oil. These are all on NYMEX, okay? That's the New York Mercantile Exchange, which then got bought by the Chicago Board of Trade, which pretty sure also had Comex, and then it all got merged together, and I think it's just CME now, to be honest, but they still have their sub-brands going. It's all very confusing. If somebody can explain it to me, then please do so. That looks quite bearish, actually. That's US heating oil, HO, and then we've got ROB gasoline, which is the gasoline you put in your car. That's turning down. That's good ahead of summer driving season. And then we've got what's good for inflation. Of course, not good if you long that product. And then the two crudes there, West Texas and Brent, not knocking my socks off anyway. Probably more likely sideways to down than up. And this one, I don't know, just continues to hover beneath that trend ribbon, doesn't it? Every time I think it's about to get going, that trend ribbon does its job, so maybe I shouldn't get too excited. Let's have a look at gold and silver, and then we're done here. Oh, I see, that's the difference between looking at knockout data sometimes and coming back and look at this chart. Sometimes you do get that extra candle because we're looking at futures that trade 24/7. And that is quite a bearish developing candle there for gold, isn't it? And I talked on the other chart of my fear of making a lower peak around here, and on silver, what's that going to look like around here? I'm happy to give both of them the benefit of the doubt at this stage because the rest of the technical setup is still good. Okay, so ditto on that one. Okay, that's the whip around the grounds. Let's head over to offline requests now. I can see all of your online requests coming through. I'm going to get to it. I saw just out the corner of my eyes a few questions here that might require me answering now. They're all stocks, and then I've got David asking, what are the red-green lines signal? What do they signal at the bottom of your screen? The image, your image covers it. Okay, I'm assuming you mean the ones on this screen, David, and you're talking about the indicator down here. David, give me a thumbs up if that's the one you're talking about. David may have nodded off or gone out for a cup of tea. No, there he is. Good. Okay, so they're the ones. So that's the relative strength comparative. So let me turn myself off. And there we go. Well done, Carl. So RSC 34. And you know my moving averages have durations of 21 and 34, don't they? Also, obviously, 144, 233. But there's that number again, isn't it? So it's a common number I use as a duration for my indicators. And the RSC stands for relative strength comparative. And what we're doing there is looking at the performance of an underlying index, and in this case it is the ASX 200, compared to the security that you see on screen. And actually, it's actually quite interesting because what we're seeing here is whether gold is doing better than the Aussie benchmark, Aussie stock market benchmark. And we can see for periods of time where gold has outperformed the ASX 200, and then periods of time where the ASX 200 has outperformed gold. And that obviously makes sense that when the ASX 200 is winning, then we're getting red bars. When gold is winning, we're getting green bars. Okay. What's relevant about this? So, well, do I invest in Aussie stocks or do I invest in gold? What's better to invest in at any point in time? It becomes more relevant when we look at, well, you could look at another index. So you could say, well, how does that compare to, okay, it's gone to zero. So I'm going to have to correct myself here. Okay, so David, what we're comparing to there is the Nasdaq, the Nasdaq Composite Index, because you can see all the bars disappear. Because when you're comparing to yourself, there's nothing to compare to, okay? And the reason why I knew it wasn't the ASX 200 is because when I go here, I get lines. And what we're seeing here is almost hands down better performance of the Nasdaq versus the ASX 200. So I misspoke before. Hopefully I didn't confuse anybody. Hopefully you've caught back up that what we're comparing here is an index. I just forgot what I set it to, okay? And I can change it. So it's set to the Nasdaq Composite. And I know that because when I put it on the XJO, we get something. And we can see here, look how much better. It doesn't surprise you. You knew that, right? But how much better the Nasdaq has been compared to our market. And of course, when I go to the comp, I get nothing. Where it becomes more relevant is hard to do now because I was going to show you, say, a chart of BHP and the ASX 200. And I don't know if I've got in my parameters here. I can change it. So anyway, you get the gist of it. Okay, I will put on a stock chart just to illustrate it, but it's obviously going to be referencing the Nasdaq, not the ASX 200, and no surprise, the Nasdaq has been beating BHP for most of that period. That's just an extra piece of information, David. Do I use it to make my final decision? No, it's just part of the puzzle. And all I need to see there is I like to see green bars. And if they're rising, if they're getting bigger, then that's a bonus too. It's not quite a filter, it's just a guide. That's all it really is. But that's what it is. Hopefully that answers your question. I flip between daily and weekly. Can you explain how you use those to decide on shortlists? I don't use daily and weekly to decide shortlists. When I'm building a shortlist, I'm only looking at my daily chart. Okay, and it's actually quite important that you're not flicking out to the weekly until you've narrowed your shortlist down a few times. Let's say you start out with 2,000 stocks on the ASX and you narrow it down to 200, you narrow it down to 20, you narrow it down to 10, you narrow it down to 5. When you get to 5, then you can start going to your weekly chart. But the only reason I'm going to my weekly chart is if it's necessary. If I'm looking to buy something and I want to see you know how I go, oh, I just want to see out the corner of my eye. Well, there is no corner of my eye. The corner of my eye is the weekly chart. And then I'm looking for those major points of supply overhead. But if you're going to do that process on 200 stocks, you'll never finish, David. You'll never get to the end. If you're checking out the corner of your eye on every stock, you're going, oh, I'm going to that one, check out the corner of my eye. I'm going to this one, check out the corner of my eye. No. And then you'll forget that you changed one and you'll do 20 charts on the weekly chart and you'll have to bash yourself on the forehead and go back and do that 20 again on the daily chart. So there I am. So yes, I do use the weekly charts, but not to filter, not to filter setups, but only to filter when I get to my tradecraft element. So that's what I'm looking for, reward to risk. And you can filter based upon reward to risk, because if you've got two charts that have equally good setups and one of them has 3-to-1 to its next point of supply and the other one only has 1-to-1 to its next point of supply, I personally would go for the one that's 3-to-1, assuming they're the same setup. But we're not using the weekly chart to filter our trades prior to that stage. Do you have a suggested screener setting to find stocks to analyse? RSI breaking through 50%? No, I don't use the RSI. I used the RSI when I first discovered what technical analysis was back in the early 90s, where probably it had some predictive edge back in the 90s, but I guarantee the RSI has zero predictive edge right now, okay, because too many people use it. There's no edge there. Please stop using the relative strength index. Short-term trend ribbon breaking through the long-term trend ribbon, not so much, because I think that's very slow. So moving average crossovers, it's probably the second thing I discovered after the RSI back in the 90s. I mean, this was cutting edge stuff. No, again, I think that's completely useless because it's too lagging. What do I use? You've seen what I use. I'm using very, very broad filters. My 21 and 34 short-term ribbon, my 144, 233 long-term ribbon. And all I'm doing is I've created a set of rules, which you can do in PineScript or Amy Broker or Metastock, whatever. It's not that hard. I'm just looking for charts where those aren't down, okay? Where they're not down, they might be up. And that eliminates a lot of stuff that's down, but it also leaves in a lot of stuff as well. So then it's a very manual process where I then manually go through it and I'm applying the rules I teach you every week, which is price action and candles. Points of demand, points of supply, good price action. It's a very manual process. I have tried times in the past to program this stuff, but it never worked as well as just me doing it, I promise you. Because what I found is the more rules I put on to my filters, the more good trades I missed. That's all it did. It just kicked out good trades. And I got to the point where I said, look, if I want to do this well, I'm just going to have to commit to putting in the time and the effort to do it. They are your 3 questions answered, David, I hope. If they're not, provide me a follow-up. Okay. Let us do the offline requests, and I need to now it's very important that I make sure I go back to all of my default settings, because we want to look at each next chart on a consistent basis. A consistent basis of comparison. Roscoe is asking for JMS, which I'm expecting is going to be a popular one. That was a big candle today. And he's saying, how concerning is the long upper shadow on today's candle? It is quite concerning. Yeah, I mean, it's more than 50%. It's reaching into 40, but I'm not worried about that. 40 is, it might be somebody who bought at 20 said, I'll sell at 40, but not more stressed out than that. We are trading in a couple of clear supply zones, I guess, and I'm guessing that because clearly I put those supply zones on there last week or the week before, and I said to you, if you see the supply side candles in either of these zones, do not pass go, do not collect $200, take a third off the table at either of those zones if you see either a candle at either of them. And naturally, I guess Ross is saying, well, is today's candle that? Look, I don't think so, but it's pretty darn close, isn't it? I would give this another candle. That's me. I guess that's why you're here. You're asking for my opinion, aren't you? So I'd say I would give this another candle, but I wouldn't give it much more leeway because of that upward shadow. But I think it deserves another candle on the basis of just how strong everything else is, and also respecting that there's plenty of white in today's candle also, and a little bit of a gap at the start. The other thing that does concern me, I know I'm flip-flopping. I've gone concerned, but it's not so bad. And now I'm going to go back to concerned. The other thing that does concern me is the massive volume and volatility in combination with that candle, okay? Now that I put those two elements in, it makes the candle worse. So if I just saw that candle in isolation and didn't look at the volatility and the volume spike, I would be more inclined to say, hey, give it a chance. Now that I incorporate those, I've gone from sort of 60-40, give it a chance, to 50-50. That's where it's put me, right? Order of magnitude. And I'm kind of 50-50 now. And all we're doing is debating minus 1/3 here, isn't it? So we're probably overthinking this, to be fair. Let me say, Roscoe, if you got out a third here, you've got plenty of justification to do so, okay? If you want to give it one more candle, you've got plenty of justification to do so. And it's on the next candle, I think, that the decision becomes much easier. Because if we get the black candle, it matches up with that shadow. It matches up with the volatility spike and the volume spike. And then it starts to make more sense. We are in, or we have found a point of significant supply. But I think it's too hard, based upon the evidence we have today, to make that decision, okay? I think that makes sense. If it doesn't make sense, let me know. So I'm not going to reiterate it because I think I've made it clear. I'm going to keep moving. Otherwise, I'll be on this one all bloody night. ANX, almost ditto. Today's candle is much better. If I didn't have this, I would be looking to buy it at some stage. I don't think today's the day because of that upper shadow. And the other thing is where the shadow is reaching into. So the shadow is kind of saying, hey, look, we're tickling some supply here. Right? It's starting to manifest itself. So it's not a buy for me if you don't have it. But if you do have it, then the question becomes, okay, is that the exit candle? And I think this one's easy. And I'm glad, Ross, you've given us JMS and then you've given us this, because it allows me to make some great teaching points, which is you can see why there was some indecision on the last one. But I don't think there's the same indecision here. I think this is, we're going to stick with our, I know there's high volume, I know there's high volatility, but we've got a much bigger body, don't we? We've got a much smaller shadow. I will still say, so for me, I'm going to hang on to a full risk position at this stage. Let me write it in. But I'm still going to say something like, watch tomorrow's candle as well, okay? Because that, I think, will be the defining candle. Because the market's had a chance to think about all of these things that we've talked about and to then respond to those things in the next trading session, all of the end-of-day traders like us, okay? So full risk position for now, but watching the big upper shadow into that supply zone, the black candle low close, and then minus 1/3, and then let's see where we go from there. Okay, let's keep moving. Going to Adrian now. Adrian's got 3DA. Which we've got a few black candles up the top there. I should go to my default zoom. And I still think we're fine. I must have done this one fairly recently because I can see I've got a red zone there. So I'm going to zoom out and see why I drew that. I can see why I drew it through that point of supply. I think a pretty important point of supply, acting as a point of demand. point of demand acting as a point of supply. And then we've got a point of supply, clear point of supply, potentially acting as a point of supply. So we have seen that we are pushing through, and it did act as a point of supply here, right there. Then we got through it, and we can see now, again, I can't make this stuff up, it just happens, how the old point of supply is now acting as a point of demand, okay? And 50 cents as well, which I would count as a round number. I think there would be people there just going, 50 cents, I'll flick out a few, okay? But I don't think 50 cents is their big goal, is it? It's more of a flick out a few. And that's what we're seeing. I'm not too fussed about those two black candles at this stage. There's nothing here to suggest that anything really sinister is going on. It's just quite an illiquid company, I suggest. So until we close beneath the long-term trend ribbon, I think we're fine here. So I'm going to go FRP. Yes, I can see the supply there. Yes, I'm going to be watching the next couple of candles closely, but I don't think we need to do a whole lot here. I don't know how that turned out to be FF. Let's try again. I must have hit the tab button, and that's what's happened there. I'm going to go full risk position, but I'm going to be watching very closely. Well, certainly beneath there. That's a relevant point of demand in that trough, and will be beneath the light green zone as well. Let's go to PGC, which looks good also. I like this one better than the last one. I think it's got cleaner price action and cleaner candles. It's obviously having a little bit of an issue here, and that's no surprise, given we've got a little bit of a peak. That's the one there. You can see where that's kicking in. And then the next one, well, let's draw a bit of a band up here so we know when we go back to my daily chart where that might be. And if I sort of pull this down, you'll see, it kind of puts it into perspective. I can also do this, and I'm sure you can do all of these things also on your trading view screen. I'm a FRP on this. I can't see anything in this chart to suggest that I shouldn't be holding on to every single one of my shares. I can't see any reason to sell any of them. Would I add to them here? I think next white candle you could, if we look at it from a reward to risk perspective, and this is where our tradecraft comes into it. We said we've got a nice white candle that kind of finished about there, and my bug out point, I call it, is kind of under here, okay? And if we're getting in around here, and we can see that we're having some issues sort of up here, the question is, do we have at least 1-to-1? And these things could always be better, couldn't they? And I haven't looked at all the setups today. I haven't done, tradecraft on all the setups. And this gets back to what I said at the start. When you've narrowed your list down to 5 or 6, that's when you do this. And it helps you understand. Yes, this got shortlisted, and it got shortlisted and got shortlisted again on the basis of its setup. And then we compare it to the others on the basis of its reward to risk, okay? But this gets through to the next round because it's got at least 1-to-1. But if I find something that's as good as this with 2-to-1, I'd be obliged to take that one, wouldn't I? So we're looking at trades in isolation here, obviously, in our discussion, because you asked me questions about random stocks. I don't know they're coming, but then we also can start to think about, well, how do these individual setups relate to the other ones we've seen today? Let's go to LIC. Which has obviously, that's the technical term, rolled over, never really got going, to be fair, unfortunately, and now seems to be pushing back into the dynamic supply of that light pink zone. It's been a very, very reliable zone in this downtrend, hasn't it? And we're there right now. But this is a very strong demand side push, isn't it? And we've actually got some decent volume and volatility on that low to tell us that, that last bastion of supply came out. Maybe even we saw some shorts cover back. I don't know, some bargain hunters, some funds coming in to play that game. And it's been a sharp rally, I think, yeah. It's a V. It's more of a V than a bump along the bottom. I'm not in any way, shape or form calling this a buy because it's not. And the question actually here from Adrian is it a turnaround play? And it's not a turnaround play either, because for it to be a turnaround play, it needs to be pushing back up above the long-term uptrend ribbon. That uptrend ribbon needs to be transitioning to amber, okay? And yes, you can see we're here. So we're actually here right now, potentially in this process, aren't we? Actually, we're not. We might, but because we're interacting with that short-term downtrend, whereas that one got through. Okay, well, forgive me on that. I'm trying to relate it back to now. We've got a strong rally, And that's what we want to see in a turnaround play. We've got a strong rally, we've got good price action, we've got the short-term trend re-establishing itself. We've got the long-term trend ribbon turning. And then we push into the trend ribbon. We do the dink, which is one test of that trend ribbon to tell us that it's transitioning from dynamic supply to demand. And this is now where we're in that turnaround setup. Okay, that's not where we are right now. Okay, so to answer your question, which is turnaround, question mark, Carl, I'm going to say, Adrian, no and no, not yet. This would be more in the realms of an aggressive setup, but it's too early for that, I think, as well. I need to see more evidence. I need to see at least another trough come in. I need to see it close above that short-term trend ribbon, preferably that short-term trend ribbon turn at least amber at this stage, because at the moment we're still double pink. And white candles, you know, and there's too much that still needs to occur. So that is a pass for me. Now, I don't know what's going to happen next. I said that at the very start of this presentation. This could be your last chance to buy lifestyle communities below $14, right, forever. And here I am telling you not to buy it. GHY. Now, this one looks pretty good as well. Didn't have a great day today. I suspect it's to do with $2. We're getting pretty close to $2. But I don't think it's going to... I just think the chart is so darn strong. I don't think $2 is the final destination for this one, but could be famous last words. But no, I still think it's fine. All you're seeing today is the manifestation of that supply at 2. And I was going to say, I bet you a few people got in at 1. And it is true. I mean, it is true. There was quite a bit of trading. You know what? There's a massive amount of trading at 1. There's a huge amount of people who got in at 1. And you've got to think about the psychology of these people, right? And if you can find charts, especially on Aussie specs, ladies and gentlemen, Aussie specs are the worst for this. If you can find charts where you see lots of volume at a round number, you can almost bet your bottom dollar that at double that round number, there'll be some supply. Okay, that's just the way we think. But I'm still full risk position even on that candle. I just don't think there's enough evidence in that one candle all by itself to negate the strength of everything that's happening. But it is a shot across the bow, isn't it? It's got my attention, and it's at 2. I'm almost talking myself into it. How high did it get today? 196. Yeah, it's pretty close, you know, within a couple of percent, isn't it, of that? Is it a minus 1/3? It's not a big candle. It's a small candle. That's the thing. I know it's black. I know there's an upper shadow. I know there's $2, but it's not a big candle compared to what came before it. And this is where the discretion comes into it. I said I'm not teaching you a black box algorithmic system. Okay, I haven't found the one that works, but I have found a model that works, a way of thinking that works, and ultimately it comes down to your judgment. Okay, and making informed decisions. I think I'm going to stick with FRP, and all we're debating here is one more candle, another candle that looks like that, and I'll knock out a third, and that's really all it is. And that's the beauty of this model. Don't overcomplicate it, right? Just make a decision and move on, because tomorrow it could be taken over at $4, and you go, why did I waste all that time? That's for you, James. Let's go to Claire, who's asking about AMI. Is it a possible buy? I think it is. Yeah, it's a possible buy because we've got a long-term uptrend. We've got a short-term uptrend. The price action could be better. That's the big problem I have with this. We've got plenty of white candles. So we've got all ticks in all boxes except for price action, which is compressing. Is there any reason why it's compressing? I can see 20 cents, but that's not a round number that's knocking my socks off. Let's go out to the weekly chart to see if there's something here that could explain why we're having a supply zone. And certainly here, because that trough, and I think it is a significant one, could create some problems down the track, but it's not where we are now, so it's not really explaining the current price action, and neither is that. And there's, I don't know, I mean, there's a little one here, to be fair. I mean, it is what it is, so there is literally a little trough and peak in there, okay? And maybe that's having a little bit of an influence, but it's minor, okay? So maybe that's what it is. And it feels kind of minor at this stage, doesn't it? But it is causing the price action to go a bit wobbly. And so what I want to do, let's go here, here, here. And you're getting these candles that aren't doing much at all, are they, in terms of candles? I mean, this day, look at that range. Here, let's call it, and here. So, yeah, look, not the greatest of price action. So I could only entertain this if it was to do something like this. So, and today's candle is great, don't get me wrong. It's a good candle, exactly where you want to see it, with some interest coming back in the volume, right? So that's all good. But I think with the price action, I don't think I'm a taker. You know what I mean? Let me just see something, some candles maybe, that just kind of just do this. And then at least with that high trough confirmation, I'm going to feel more confident in having a crack at that. Okay. If I had it, I'd still be FRP, I think, for now, but I'd be changing my mind beneath here, 100%. And that's, I've given you the basis in which to add. The question from Claire is it a possible buy? Well, I guess everything's a possible buy. Based upon today's candle lower shadow, proximity to light green zone, you're picking out all the perfect things that you need to be picking out, Claire. But as I said, I think I just want a little bit more on this one. If it's something that you like because, I don't know, you're a fan of copper, or you've read up on this one and this is the one that you really are keen on, and I wouldn't recommend doing any of that, but if that's you, I know some people are that way inclined, I don't mind. You know, you're only adding a third. If that bothers you, add a sixth just to get some skin in the game. Because yes, it is a good candle. Okay, and remember what I said. Don't beat yourself up all the time on the methodology. If you can get to a point, you go, look, I can see this. This makes sense to me from a technical perspective. Put some on it. Okay, and if it goes right, you're going to add more. If it goes wrong, you only put a bit on it, and you're going to get out. We are not wed to these things, ladies and gentlemen. They are just shares. They are not our wives and our children, okay? I've been wed for over 20 years now, okay? That's not something I can get out of too easily, nor would I want to. But AMI doesn't go right, I'm out of there. Let's go to, you should never go into a share investment with the intent of being in there longer than you need to be. SLC is on screen. Now this one, I was going to say this one's been taken over, but actually I don't think it is. It got a big contract, didn't it? It got the AGL contract, if I'm right. And somebody lost it. I can't remember. Somebody lost it. They plunged. These guys got it. What is the question? Holding, waiting for something to happen. Yeah, okay. I think I wouldn't have a full risk position here, though. I don't think it warrants a full risk position. A third of my skin in the game is probably fine, because if it goes up, at least you're not kicking yourself. But if it goes down, not only you're not kicking yourself, but at least you've got 2/3 doing something better right now, Claire. I think that's what this one's about. But don't get me wrong, everything else is magnificent and therefore warrants the 1/3 skin in the game. But none of this warrants, I think, any more than that at this stage. Hey, pop in a big white candle, and that's where you could add the third back that you might have taken off, okay? And all you're missing out on is a few cents if that's the case. But if it's going to go, look at this in a measured move sense, $1 to $1.30, the next move could be $1.60. So if you give up a few cents, no big deal, right? MSB, and we're holding 2/3, took a third off near the last peak, which was $1.20. I wonder why you did that. I can see some supply in this zone, but nothing specific. Certainly this candle is disturbing, and I think to go on the basis of that candle alone into 120 might be a little bit of aggressive for an exit. But once we start to get these, and I think this one here is the one where I go, look, I better get a third off just in case, just to see, okay? Because what I'm expecting is for something like this to happen, right? Okay, but I think you're right. I think you're in the right position here, Claire. 2/3 on, 1/3 off, and just seeing where we go. Where would it start to not look as good for you to get some other thirds off? Well, I wouldn't want to see another one of these, Claire. So if I saw one of those around here, especially if it started to rally. Yeah, so if it started to rally and I saw one there, that's when I'd drop another third. And the beauty of that is it would give me a trough around here to sell the final third. Now, that's looking a long way into the future. Without those things, watch this area here. These two big white candles are your key marker of where demand is. And if we get beneath those two white candles, if we're close beneath those, that demand is gone now, and that would scare the pants off me. So I know there's a few markings on the screen, but also know, Claire, you'll be able to rewind and play it back a few times. It will make sense, I promise. Okay, let's go to Claire's last one, which is LGI, which she just says holding on that. And I think that's where you want to be. I'm an FRP. I know there's a few black candles there, but it's not the most liquid, company anyway, is it? Where we're getting these clean candles. I mean, look at this. It's not a clean candle sort of company. So it's probably just drifting back to, to only do the next leg up at some stage. So I'm happy with that as well. You've got to have a plan, don't you, for an exit. So, I think a close beneath, a black candle, low close beneath the light green zone is always a good place to lighten the load. And that's all the offlines. So let's go to your requests online. Thank you for being so patient. Perry's got SEM. And this is the, is it S? It's just SEM. Okay, I don't know if I have an SEM, but I do have an SEMI. Let me go up here and double check this one, SEM. And Perry's doing thumbs down. I have to scroll down to the bottom. I'm sure he's updated me somewhere in here. SEM is a US stock. No worries. Let's have a look at SEMI while we're here, because it doesn't look too bad, and it's got a very much US flavour about. I'm sure that's where you wanted me to go, Perry. And it looks okay, doesn't it? I mean, it is a little bit Nasdaq-esque, as we would expect. We're talking about the big semiconductor stock here, so I'm guessing NVIDIA has to be in there, doesn't it? Microcomputer has to be in there, and a few of those other ones. I think it looks fine. I think it's, high troughs coming in, shallow pullback on this last little go, coming and testing and holding the short-term uptrend ribbon, and still in a long-term uptrend. So if I had it, I'd certainly hang on to it. If I didn't, I could see on the basis of mixing up the setups in my portfolio, adding a third to that one. But let us keep moving to Peter, who has WIA. And what did I say here? Minus a third. And I always get confused because I wonder, it couldn't have been on this candle. There's no way I would have said minus a third just on that candle alone. It must have been something before that, or I might have been saying if you get a black candle at 10 cents. And if that's the case, then I could see how you could do a third there, but only a third. And it would have gone straight back up, and you might have cursed my name. Carl, why'd you make me sell a third? But you also probably would have said, well, look, I'm glad I took some profit, and I've still got 2/3. You could always get back in another third on that candle, which I think warrants it. This candle also warrants a plus 1/3, but not any of the ones after that, okay? And I think you're still full risk position here. I don't think there's anything so sinister going on up here for you not to be full risk position. Now, let me just look out the corner of my eye to see if there's anything major there in terms of points of supply, and there isn't. So I therefore will be nothing less than FRP at this stage on that one. Could I buy it if I didn't have it? Yes, I could, but just waiting for the right candle to come along. So any of the ones, any of these two. So if I go, I can't say any of the ones I've drawn because I've also drawn an arrow on a black candle, but let us say candle 1 or candle 2. If I see those again. Let us go to ANX, which actually we've done. So just a reminder there, we talked about the point of supply. We're still full risk position, but we are monitoring now, obviously, for further confirmation candles that we've got supply at that level. But okay, for now, WKT. I can see why you might look at this. Yeah, look, it's a turnaround play, isn't it? We've got the big base pattern here. This candles are sketchy. It's hard to do my brand of technical analysis, which is so dependent on candles when we're not really getting candles. Price action trends suggest that it is a warm one, not a hot one. I'm going to give it 5 out of 10, maybe 5.5 out of 10, but struggling to get any higher than that. Where it would start to look good is if I saw, a decent whack of volume, which indicates a bit of supply removal, some of the dead wood that's so clearly in this one, getting taken out of the market, put back in cash so that they can reinvest that back in when they regret getting out, but also demand and interest. So a bit of volume coming in, a nice white candle close, say 13.5, or above. And then I could add a third to this if this was the one I really liked, Walkabout Resources. But again, there's not a, that's not my style, and there isn't really enough to go on for me in that just yet. Ben saying, hey Carl, hey Ben. Perry's got some US ones, we'll do those later. Adonis has got some US ones, we'll do those later. Brett's saying RDN, which is Raiden Resources, which looks great. This is my favourite chart so far today. Clean price action, some candles that actually make sense. Short-term trend is good and it's accelerating. Long-term trend is up. And nothing really major in points of supply to concern me at this stage. So for me, yes, this is 100% plus 1/3. On that one, no questions asked. If I had it, obviously I'm holding what I have and I'm considering adding more to it. Let us go to, this is Brett's next one, which is coincidentally ANX. I guess a few of you got on that, which is good. RNX, which also looks good. It looks probably similar to the last one and some of the other ones we've seen. But again, we're back to sketchy candles. We're back to sketchy volume. You can see some days you can't even see the volume there. But again, putting putting those things aside. No, not putting those things aside. I just don't think they're as relevant. I just see a great trend. I see great price action in terms of the runs are much bigger than the pullbacks, and the short-term uptrend is supporting. So yes, on the basis that everything checks out, I'm going to go plus 1/3. But this is where the other bit would come in, the counselling that it's a little bit sketchy and maybe a little bit illiquid. It's a 1.7 cent stock. But if that's what you're looking for and that's what you like to do, and I know people love trading these little ones, I don't mind them, then go for it. Hey, if you're looking for something to add to your self-managed super fund for the long term, this is probably not it. So common sense needs to prevail here. The Asia ETF, ASIA, literally, looks magic. Obviously, we looked at the Hang Seng, we looked at the Shanghai Composite. We think those trends have turned. We've actually discussed looking at this. I think last week we talked about some of the US leveraged ETFs that you might want to trade on that theme. I can't remember them off the top of my head. Go back to last week's presentation, they're there. But if you're looking for the Aussie ETF, this is the one. And it looks very, very good to me, no complaints. And it's plus 1/3. Plus 1/3, no questions asked. And obviously, if I'm typing a plus 1/3, it is also a full risk position by implication. If you've already got it, looking to add to it. That's from Brett. Thank you, Brett. John's got DRO, Drone Shield. Haven't looked at this for a little while. Okay, well, it's pulled back. What's this species ending event? Where the dinosaurs came. Okay. I don't know, what's all this species? Dino's big rock that fell from the heavens. Okay. So I guess what I might have been saying, let me put that over there. So see the price action is you might have wanted to have gotten all out on that day. CF is confirmation, perhaps, of that. And it didn't go down. It didn't keep going down. How about that? My model didn't work 100% there. You would have then been looking to get back in as the trend continued. And I think this candle here is certainly warrants a plus 1/3. This candle here, I'd be happily adding a third on that. And very close to that candle, just a little bit of an upper shadow, certainly on that candle. So I think we would have got the risk back in very quickly. And then been in it for here. Is any of this? No, what's this? Oh, this was $1. Okay, I wrote you can see here it's $1. I said if you, I probably would have said something like sell a third anyway. So out a third here of what we bought here. Nothing so sinister here. Maybe this one here. You could go another third. And then you're just waiting for the close beneath the short-term trend ribbon, which never came. I think you could add a third back there if you really wanted to. I think you could add a third there, and I think you can add a third here. And it's just illustrating how you could have traded this. So let us just say, well, let's say, I don't know, for argument's sake, let's say we did 2/3 on that day, only so I can do minus the third on that day. And then let's say we did this. I know we can't do anything about it now because it's ancient history, right? But just as a case study to get your eye in, if you were to trade it along these lines. And that wasn't there. That was saying I must have said here, you'd take a third off the table and you'd keep 2/3. That's what that would have been there for. So let me just relabel that in line with this new case study we're doing. That stays at $1. I wouldn't change my thesis there. And then I don't like that candle there. I don't like that one at all. So I might go a third there, and then you might go plus a third back in here, and then plus a third back in here, and plus a third back in on today. That's it. I mean, $1's not a problem anymore. We've dealt with it, so it's out of the psychology. But interesting to see how, isn't it? How you could literally just have applied the method, and how you would have sort of trundled along, never being all in and never being all out. Actually, you would have been all out there. That's not true. Plus 1/3 is the answer to your question, John. GQG. Still fine. I'm making the mistake of not zooming out before I go back to the next one. Still fine. Obviously, there's some stuff going on here. 250, a little bit of a round number, not particularly important one, but probably will make some people want to sell a few shares, and that's exactly what we're seeing. But everything else is fine. So I'm still a full risk position at this stage, just to see how it goes, isn't it? Lower peaks, black candles, blow off tops, all that sort of stuff we're watching for, but it's not there yet. So let's just stick with our full risk position, shall we? Let us go to Ben, who wants to do CHN. Very interesting. Trying to turn around, trying to turn the corner. Is this an aggressive setup? This is qualifying. It's got everything else that we need for an aggressive setup. So we talked before about, it might have been LIC, I think it was, and how that was still double red. Okay, so this one at least, we're back to a light green zone. Okay, we've got the benefit of a long base pattern. Okay, which at least some of it has some higher peaks and high troughs, and preferably where we are now is also high peaks and high troughs. It's not, but it wouldn't take much to turn it into that. Okay, so something like that is going to turn this into higher peaks and high troughs, and we have the base pattern. Okay, and preferably we're starting to see some demand sort of show up in the volume. Okay, and I think that's okay. And then the final piece of the puzzle is we're not so close to that long-term uptrend ribbon that it's going to beat us on the head too soon. And that might end up being the final impediment for this one. So it's ticking a lot of boxes as an aggressive setup. And I think I might have said to you in the past that this is, let's just label it AS for aggressive setup. AS, there you go. It's a fine line between an aggressive setup and it being an AS for you, isn't it? Freudian slip there. Aggressive setup. So I think those were, and you can see they didn't do very well at all, such as the nature of aggressive setups. But I tell you what, if we get that candle there, if it appears over here, it would once again, I think, be an aggressive setup. And all we're talking about here, we've spent so long on this, but all we're talking about is having a crack at it, right? But it's not there yet. Okay, so let me just do this so I know that I haven't said it. I'm just mulling it over. If we saw this candle there, if this candle there, right. Let us go to the next one, which is Liontown. Okay, well, some interesting charts here, certainly on these beaten down battery metals companies. What time is it? It must be an hour in if I'm starting to stumble. Okay, hour in means stop putting any new ones in. I'm going to check where we are. That would be DRO and SPP from Jenny. Welcome, Jenny. I haven't seen you in one of these for a while. And that will be the last one we'll get to in this, and then we'll go head back up for the US ones. Okay, so we are going to do this one here, which is Liontown, and I think it's too close now to the long-term downtrend ribbon to be an aggressive setup. It's not a turnaround setup yet, is it? So it kind of leaves me no man's land, which means I should probably just keep moving. It's both too early and too late. It's too early for a turnaround setup, and it's too late for an aggressive setup. So it's a pass for me. And I think it still is very much beholden to. I'm going to draw sort of a range there, and if I was to draw the bottom of the range, it's probably around here, isn't it? And if you kind of look at it in that light, you can see that it's probably going nowhere pretty fast. So I don't think there's any rush here. What would make me need to rush? And quite a bit. We need to see that long-term uptrend driven change colour. At least we need to see push into it, test it. It's nice candles, a bit of volume preferably. So I think we're quite a ways away from wanting to add some risk to that. That's just my opinion. Let's go to finding my place again. DYL. Back to uranium now. Looks fine. We're having a little bit of an issue here, which is no surprise to anybody that knows how to read the charts. The way I read them, the way I've taught you to read them, a little bit of supply here. And literally a little bit of supply. Do you know how you know there's a little bit of supply? Look at the candles. There's a little bit of supply here. The candles are literally telling you that. But there's also a lot of demand. So I think we're fine. Look at these white candles. Price action is still quite good. We're getting some compression beneath a major point of supply, so no surprise that that's occurring. So nothing is surprising me on this chart, and therefore nothing is really worrying me. If I had it, I think I'm still full risk position, but I'm also going to be mindful of the fact that there is a major point of supply, and if the candles start to develop nastily, I may start to reduce that risk position, but happy to give it the benefit of doubt at this stage. In terms of demand side, look, I think there's going to be plenty of demand in and around here. 155 to 160. I don't want to see it trade. Look, I don't want to see it trade under here. This is sort of the bottom of that candle, and also beneath that peak. I certainly would want to see it to trade beneath here, and maybe this is giving you some areas where failing price action and candles. I doubt that'll be the case. I think you get the price action and candles to tell you want to be reducing your risk. But if you didn't, there's 3 really sensible places to start to reduce risk. Let's go to MS. Oh, actually, we've done this on Mesoblast, which we said, we talked about on the basis of owning it, which I think Claire had, not running a full risk position, because there's certainly evidence there to suggest that we don't need to, but still having some skin in the game on the basis that the trend is still very good. But I think I'm going to be a little bit ruthless here, because what's your upside? I mean, at the end of the day, we do have a major impediment here. So as a follow-up, Claire, yeah, I think, being pretty ruthless on the last 2/3 as well. Let's go to Jeremy's PXA, which has had a tremendous run, hasn't it? I think they had a market update that was well received, and it has now pushed above this point of supply here. And I would totally expect this point of supply to act as a point of demand going forward. We hit $15 there. Not a particularly strong round number. I don't think anybody's going, oh, if it gets to $15, I think 20 is more significant, 10 is more significant. But a reason to sell a few, and that's all we're seeing. We're literally seeing a few people sell a few. After 15, what do we need to concern ourselves with? Well, certainly there's a pretty decent zone here that we can watch out for, and I'm going to suggest it's not that far away, is it? Up there. So whether I want to be adding risk at what I'll describe as this late stage, I'm not so sure. If I had it, I can certainly see a path to holding on to it and trying to get a little bit more out of it. If I could see it, if I saw it throwing some really good candles here, I could get in on the basis that it would make my reward to risk much better, because if I'm getting in around here, there's really no point. But if I'm getting closer to here, it's just giving me that extra bit of reward compared to my risk if I was sort of bugging out, because the short-term trend ribbon, think about where that might be at that stage to set stops beneath or have exit points beneath. So if you're kind of working it on that basis, that's your downside, and that's your upside, you can make it work. But so much needs to happen for that to occur. I'm only showing you that stuff on the basis of teaching you tradecraft. From King, g'day Carl, g'day King. After your thoughts on RDN, which actually we've done, I think it looks amazing. So plus 1/3 there. Dipped a toe in the water last week. Well done. I'm sure this is not the first time. This chart looks very familiar, and I want to say we talked about it here, or here, or here. I don't know. King has certainly dipped his toe in. That's wonderful. Have a nice candle today. No news. Who cares? Let's hope they don't get news. The less news, the better. From Peter, that's brilliant. Thanks for sharing. Not a problem at all. David's asked his 3 questions I discussed before about my relative strength comparative. how you use daily and weekly charts and when you use them, whether it's filtering or whether it's tradecraft and screeners. Michael, can you look at DXB? DXB, which was looking fantastic on this candle here. It was looking magic, 10 out of 10. And we've had 1, 2, 3, 4, 5, 6 lousy candles in a market that actually hasn't been that bad, has it, Michael? And I'm feeling your pain here because I think you're a little bit ripped off on this one. For it to look that good, have a market that's been pretty good, and to get those 6 candles, I think, is an outlier in my experience. The market is not out to get you, okay? It's just going to happen, unfortunately. But they're very mild. I mean, 6. If you said you're going to have 6 black candles in a row, and you're only going to go down and touch the like ribbon, you probably say okay. So I still think we're okay. Watching beneath here, I don't see close beneath that. You know, it's beneath these 2 little demand points. It's beneath the light green zone. Certainly not beneath here. You know, we're creating a roadmap for how to get out of this one and get into something, you know, that is moving, so that this one doesn't clog up our time and our capital. But until then, you know, it's full risk position. It's really not that bad, and everything else is still checking out at this stage. Price action could be better. It's starting to compress, obviously, inside this peak now, isn't it? We don't want to see it there. But there's not enough evidence in what I can see to suggest that we need to manage our risk just yet. Hopefully we get that next big white candle and we're off to the races, much like that Raiden chart, because everything else looked very good before that. Let's go to OMH. Oh, this looks good. I like this. So this is the turnaround setup right here, isn't it? It's gone past the aggressive phase, and it's more the turnaround phase. If this candle had closed higher today, it would have been magic. It hasn't, and that's a bit of a problem. The entry is actually there. I think that's your little turnaround setup entry when you get that nice white candle after the dink. You can see the dink. Actually, a couple of dinks here into the zone, telling us it's now dynamic demand. How about that? Oh God, I love these trend ribbons. So, you know, dynamic supply, right? Dynamic demand. That's how it works. I could still go a cheeky 130 here, just on the basis of the volume today, a turnaround setup, mixing up the setups in my portfolio. There's got to be dead wood here. Let me show you how much dead wood there probably is. Right, there's so much dead wood on this one that we shouldn't be surprised if it pops up. You've got some brokers calling some clients saying, "Hey, do you realise Holdings has got back up? Oh, you better get out." And or, you know, traders doing that to themselves. Holy shit, this has gone up, I better get out. That's what you're seeing in that upper shadow. It's the manifestation of dead wood hitting the market. But there's still plenty of white, and everything else is good enough to say that, you know, we're seeing a changing of the guard here. Maybe, let's say, next white candle, next, you know, high close, you go to plus 1/3. Next high close, let's call it high close equals plus 1/3, just so we can remember for next time. But a very interesting case study, Michael. Michael's next one is NXL, which we haven't done. We did PXA, I'm getting confused with, and this one looks fine. No complaints here, 250, ho-hum. I'm not too stressed out about that one. But, you know, you will see some people sell there, and that's what you see today. Some people are selling there. Zoom out. This one has had a checkered past, as I remember for so long. It was going down. It was a float that a lot of people lost a lot of money in. And then I was very early in my shortlist, and also I think at Theme Markets on Ausbiz to call this one a buy. And I love doing that. Nothing gives me greater pleasure than to call something a buy that's been going down for so long, and to say, you know what, there will be a time to buy this stuff. You know, you just have to be patient. And it's fine. Yeah, full risk position, no complaints. I don't think I need to say anything more there. FRP, there's certainly no sell signals there, but equally there's nothing there today, exactly today, to compel me to add risk to it. Let's go to VUL, which is the lithium stock I said that looked really good last week, and it's going well, and I think it looks just as good this week, and no complaints on that. I don't know why it's going up, nor do I care. But yeah, plus 1/3. I did say it last week too, didn't I? So happy with that one. Let's go to MYX. It's no complaints here. It didn't really do what I thought it was going to do. I thought, certainly on this candle, it looked very, very good. And it's a bit like, what was that other one, DMX, where you've literally had 6 crappy candles. I don't know. It's in any other market, it probably wouldn't have happened, but it did, and you just got to deal with it. I'm still FRP, but I'm watching underneath here and watching underneath here. Frustrating stuff. Frustrating. I feel your pain. Let's go. That's for crackers. Let's go to VMM. No complaints here. Viridis Mining and Minerals. We might have said plus 1/3 a couple of times. Full risk position on this one. If anything, that's another plus 1/3 right there. Okay. So as recently as Friday, adding risk to this one, but not today. Not today. Just sticking with an FRP for now. It's certainly not a sell signal there. It's tiny. Let's keep moving. I'm going to pick up the pace because I am quite a ways behind here. BC8. Okay. Well, yeah, this is another turnaround setup, isn't it? And I would have said, based upon Friday's candle magic, happy with that. No complaints. Perfect. That is the perfect textbook setup right there. Perfect textbook turnaround play. Take a picture of it. Wherever you keep your records for, these are the ones Carl said's a textbook. Really, all we're doing is pattern recognition here. If you see that pattern, you buy it. It really is that simple. Today's candle didn't close on the high, but I still think it warrants, on the basis of the strength of the turnaround setup, plus 1/3. Certainly did on Friday. But I don't look at these for you on Fridays, I only look at them on Mondays. Let's go to FRB, which, it's a different one from what I was thinking it was. FND I was thinking of, which I did want to talk about today, because a few people had it. And yeah, I think we're going a minus 1/3 here. Okay, just so this one, today's candle, you might want to wait if you want to be really cautious for a close beneath there. Okay, but I'm happy just to jump the gun and on tomorrow's open, go 1/3 and almost anticipate it. But I'll leave that up to you. Okay. But yes, a few people have asked for that. I'm not sure if it's in the list today, but I did see it today in my travels, and I wanted to discuss it. But I'm going to go back to your FRB, which looks good, looks great. No complaints. It's a turnaround setup. The textbook turnaround setup also right here. Take a picture of it, stick it on your wall. Right there. Right there. Yeah, look, this shadow is disturbing. Disturbing is too strong a word. That's not surprising given that candle, but today's candle has come back really well. There's nothing here. Nothing here is worrying me at all. So that is why we saw some supply up there. It's perfectly natural, perfectly expected. This is all rubbish, really, isn't it? I'm not even sure if any of this could possibly make a difference. Up here it will. So I think we're fine. I'm not worried about this one. So yes, today's candle is enough for me to go plus 1/3 on this one as well. Okay, I've seen quite a few of these little turnaround plays. I also like, obviously, the volume that's coming into my calculations. Let's go to, they're all US stocks. Thanks so much. There's David, worries David, PXA, which we've done. OFX, which we haven't done. It's sort of getting close to that turnaround setup, isn't it? But not quite there. And I don't think I need to discuss it anymore, because I think you kind of get the picture of what needs to occur on this one. So in your brain, tell yourself what you think Carl would say here. And I bet you're probably right. CLG. And I'm going to get ditto for this one. I don't think we need to do anything on it just yet. Next white candle, it's going to start looking interesting, because it will start to be more of a turnaround setup. But I'm not sure if I could be bothered. Yeah. In fact, I'm quite certain I couldn't be bothered. Let's go to D. I've done DYL, said that was fine. VNL looks very interesting, doesn't it? It can go again. I don't think you're carrying a full risk position on this one because of this. Okay, so I don't like. These are good candles. Like, these are demand side candles. So for us to be here today is a bad thing, right? Blend these together. Was that a minus 1/3? No, I think that's just being pedantic and jumping at shadows. But I think you've got some problems here, and I think, you know, that's certainly a third. And next black candle, next, let's call it low close, is a minus a third as well. Okay, that's how I think about that. And then you might save the last third for, you know, down here if you want to give it some room. So this is not an FRP for me. I think some action is required there. Let's go to Linus for Jackie. Well, hey, we talked about this as a potential turnaround setup, didn't we? We also talked, I think, Jackie, you might have asked me about an aggressive setup, and I think you might have asked it around here. I'd have to go back and check the tapes. And I would have said something like, I can see why you'd think it's an aggressive setup, and it does tick pretty much all the boxes except for the proximity to the long-term downtrend ribbon. But this is, you know, this is the beauty of this model, is that aggressive setups turn into turnaround setups. Turnaround setups turn into continuation setups, right? So yes, that was an aggressive setup, but probably wouldn't have taken it because it's too close to this zone. But look, we just get into the zone and we do the dink, don't we? We turn the colour. We've got the short-term uptrend ribbon. I've obviously drawn an arrow here in the past to say we're respecting that now. We've got the white candles coming in, and here's the dink right here, okay, in there. And from there, it's fine. You're just waiting for, as we say, next white candle. We went here to do it. I'm going to say that's Monday, Friday, Thursday, Wednesday. So Wednesday is where, for me, there's no question anymore. This is a turnaround setup. So for me, Wednesday is a plus 1/3 if you can stomach all of this, okay? And that's up to you. I would say, much like the last one, I probably couldn't be bothered. And that doesn't mean I don't think it's going to go. I'm not going to go up. On the contrary, if it's a setup, if it's an official bona fide setup, by definition, I think it's going up. But that doesn't mean I want to trade it, okay? Because there could be other stuff out there that's going to be an easier run and potentially have a higher payoff than this one. But that's an official setup. It should go up in theory, but where's it going to go to? But I know some people love Linus and they don't care about those red zones. They just want to make themselves feel better about owning it. And I think you can feel better about owning it now. Let's go to FPH. And that's okay too. You know, we all have our pet stocks. I don't, but you do sometimes. This looks great. I can't fault this at all. I think that's a great chart. Let's go zoom normal. Let's go weekly. There's a bit of stuff here to potentially contend with. We never say for sure because we don't know an area of supply until we get there. So that's an area, and then certainly up here is an area as well. So if we go back to the daily chart, that gives us an idea of our reward to risk. So we kind of look up. I don't think that's a problem at all. You know, this was a supply zone. It's acting as a demand zone now, and you know we've got that area there. If we turn up from here, so like next white candle, if you want to wait, I don't think you need to. I'm happy to go plus 1/3. I'm going to draw that on the screen in a second. But next white candle sets this as a trough, right? So, you know, that's your first point where you might want to start to lighten your load. And then beneath here, and then beneath here. So if we're sort of planning this trade out, you kind of go, let me turn that to red. You're going to have as exits, you know, it's kind of somewhere around there, somewhere around here, and then the final exit would be under here. Okay, so planning the trade, planning the exit. And then is that enough to make one-to-one into here? And I'm going to say, if you took the average exit of those three, I think you can. Okay, so we would be allowed to take it to our shortlisted shortlist, and you know the tradecraft. In the tradecraft, you would still be getting a tick. If it's the best trade, we would take it. So I'm a plus 1/3 here. Let us go to. Sometimes I don't mean this in the wrong way, but sometimes it feels like this list is never going to end. NCK. Nick Scarley, we've got some problems here. We are making lower peaks. We're doing it with some nasty supply side candles, and I could see every reason to not have full risk position on this already. And I think we've got a decent roadmap. So I'm going to go minus 1/3. And it is an aggressive exit, to be fair, because there's still a lot of good stuff going on here, okay? But just on the basis of that and the candles that have occurred, I would have no qualms just knocking out a third. It's still got 2/3 on the table, and then just having a plan for how to deal with the rest of it. And we're going to go, obviously minus 1/3 here, and then minus 1/3 here. So that's how we do that one. And all right, you. Now, where did I say to stop? I reckon I've gone past the stop point where I said don't put it in more. I know it was Jenny's drone shield. Oh, I'm still going. IRI. Here we go. Oh, look at that one. You should still buy it, but it's a long way away from the light green zone. But it's that's still a buy based upon that last candle. I don't know why it's going up. Is it a takeover? I don't know, but that's magic, isn't it? Let me go here to see if there's anything to be worried about. You're going a long way back to find anything. Dynamic supply there at the weekly long-term trend ribbon. I'm not too fussed about that. It's probably there, isn't it? Maybe there's a little bit in here as well. Look, if you've got it, well, that's easy. Full risk position, isn't it? The only confusing part comes if you don't have it, and then you decide. I'm going to go. Look, if plus 1/3 feels too much to you, just to have some skin in the game, I'd go plus 1/6. But otherwise, obviously, full risk position. There's no reason to sell any of that at this stage. Let us go to. People have asked multiples today, lots of multiples, RCR, which is fine, but there are some issues developing here. We do have, this candle is a big problem for me because look where it came from, and then that. I think if you saw that, you would go minus 1/3 there. So I don't think we're full risk position at this stage because of that candle. I even think that that candle you might go another third, and then you're warming up. I think next black candle that kind of closes, let's say if it closes looking like this, right, then that would be the next third there. Okay, but I don't think you've got a full risk position right now. Somewhere between 2/3 holding or 1/3 holding, and I've just given you a roadmap on how to get out that remainder. Let us go to Rincon Resources, that one, PNV, which we've said in the past, again, minus 1/3, still holding 1/3. I think that would have not been the case there, and I think you actually would have had a reason since then to be all out, certainly, since I would have written that. Let's see if this is a minus 1/3, just for your reference, that would also be a minus 1/3, and then really no reason to hold it after that one, 100% minus 1/3 there. But hey, that doesn't mean they go down forever. It's starting to build itself back up again. I can't see an entry prior to, even that is, I think, too early for me, but this is starting to warm up again. So much like I drew the black candle last time to get out, I'm going to draw the white candle here to describe what you want to see to get in, to add some risk to this one. And it would look like this, and then that, if that occurred, 100% I'd be plus 1/3 getting back into it. Not too fussed about that if we saw a candle that good. To be fair, we're just having a tickle at this one. We'll see how it looks when we get to that point of supply. Let's go to SVW. Pexa, I've done 1, 2, 3, 4, 5, and then we're heading back up the list. My gosh. SVW, I think we've got some problems here. I can't write FRP on this one. And that is interesting because for almost 18 months, 2 years, you're pretty much FRP. There's a few exits there. But it's been such a strong performer, hasn't it? But yeah, I think we've got some issues here. I think even on today's candle, I'd almost just knock out 1/3, just as a precautionary measure, nothing else. That is if I hadn't done it up to this point. I think you're still 2/3 here. That's not what I meant to write. 2/3 here, but you're certainly on alert at this stage. We don't want to see it get beneath here. Okay, that's a problem for me. Let's go to PXA. We've done JLG. I'm not sure what the basis of request is here. It's not aggressive setup? I don't think. No, it's not really a turnaround setup at this stage. It's certainly not a continuation setup, but it could be, I guess, a turnaround setup if it starts to trade above there. But even then, we've kind of got this, and we've kind of got this. It's falling to that camp of, you know, yes, it might, you know, show some promise in terms of a turnaround setup, but you kind of have to say that the leopard here, its spots are not exactly, you know, very attractive, are they? So what's the point of something that trades in this fashion? You're just asking for pain. So let me say, if you like pain, then certainly buy that one. Thanks, Heaven. Let's go to QBE. Now QBE, that one looks much better. But I think we've also still got a few little problems here, and I don't think I'm FRP on this one. But I think 2/3 is certainly warranted. If you were 1/3, I wouldn't complain either. But there's enough in the, certainly we've had lower peaks and lower troughs. We've come up, we've made, you know, another, it's not yet a major peak, but sort of shaping up that way. And then another couple of very uncertain candles here. Okay, and on that basis, 1/3 just as a precautionary measure. Now next white candle, I could add it back in, but yeah, just a precautionary measure, and maybe even then that's being a little bit cautious. So if you wanted to go FRP, I'm going to say, and the reason why I'm saying that is, you know, these are still strong, these are still good, you know, it's still holding the trend ribbon, that's still up. So all I'm really doing here is wavering between plus 2/3 and full risk position. So if that gives you any comfort, that's a good thing. NXG, I'm not sure why that dropped today. It dropped on Friday in the US. It's a little bit opaque over there, so I can't say. A little bit like the last one. I don't think you can be holding a full risk position on this one, unfortunately. But yeah, look, next exit points through here. It is a sketchy chart, isn't it? And we talk about sometimes the leopards and its spots, and when you get this many gaps, because it's not really an Australian stock, it's a US stock, and it's just playing catch up to currency movements and fluctuations over there. Probably not the most liquid thing. It just makes it frustrating to trade. It's not that you shouldn't trade it. It's just prone to these sorts of moves. Let's say 2/3 at most on this one, and that is a big at most, because it's actually probably more like a 1/3 at most at this stage, and then probably a minus 1/3 on a close beneath there. Doesn't feel right, that one, does it? We've done Drone Shields SPP, which might not be the right one because it's not really coming up here. So given that the lateness of the webinar at the moment, Jenny, I might just leave that one if I can't find it on first pass. I'm going to head to the NYSE now, so don't type in any more. I just won't see them, and we'll have a look. There's not that many, so we'll get through them fairly quickly. But ZIM, which is ZIM Integrated Shipping Services, which looks really good for a turnaround play, and we can see where we would have had, excuse me, I'm still a bit croaky there. It's an hour and a half in. We would have seen this setup there. So yes, for me, it's run a bit since then. So hopefully, Brett, you're asking on the basis that you're already in it, and what should you do with it? In which case, it's easy. I say full risk position. If you're asking whether you should get in now, that is a little bit harder to call. But let me try and do that for you. There is your next supply zone, I suggest. And let me go here. Not as much of an expert on this one, but we will persevere. There we go. So if we zoom out, you know, that's where you're headed. So it makes it hard to call it a buy right here, doesn't it? Given how far away you are from the light grid zone and other points of demand. So it's kind of, unless you're already on it, you're a little bit of a spectator at this stage, unfortunately. But, you know, next pullback, and then it just changes that reward to risk because you're setting a higher trough, you're setting a higher point of demand, and that changes your reward to risk around. We've done it a few times tonight. So if you've got it full risk position, you're just riding it now till you get to that pink zone and then watching the candles there. If you don't have it, next pullback, I think, is the way to go. Hey, if you want to add a sixth here and just get some skin in the game because you desperately want to be on it, then no complaints, because there's evidence there. There's evidence to suggest that's fine. Let's go up the list, and we're going to go to next US stock in the sea of Aussie stocks tonight. I can't even see them. NRG, here we go, NRG. And these next three are from Matthew. Oh, Matthew, that looks great. No complaints there. Let me check the corner of my eye. Nothing to worry about, all blue sky from here. Yes, for me, I know Friday's candle wasn't a screaming demand side candle, but this just the balance of evidence is too strong to tell you that you have to wait. If you would like, next white candle. If you want, a pullback first, but I don't think that's necessary. Everything else is going in its favour, and I also like to see this horrible candle here, horribly bearish candle, and now we're trading above it, which means there's a bunch of traders that are on the wrong side of the market. $100 is not that far away, but I think you're certainly making one-to-one reward to risk into there. Next one for you then, Matthew's RSI. Coincidentally, we talked about the relative strength index tonight, but this one is Rush Street Interactive. No complaints there. Friday's candle wasn't ideal. Let me just check the corner of my eye there and say that there could be a bit of an issue here. Obviously, it's a little bit of a while ago, but old points of demand. Oh, I guess it's been dealt with, hasn't it? It's been dealt with here. No, scratch that. So here's the next level, 1150, which is up here. So I don't think that's going to create any major problems for us when we zoom back in. And you do something like this, and you start to see where we are in terms of reward to risk. Look, no complaints. I do think based on Friday's candle, you're waiting for the next white one though, and that might also give you, whether it has a nice lower shadow, it might give you another little demand point to set a stop beneath. So like first exit's kind of around there-ish, next exit probably there-ish, maybe there's 2/3 there. So if you kind of think, well, my exits are on average somewhere about there, and my entry's about here, then I've got one-to-one. But I say about because you'll know when you work it out. So no complaints. If that's the one you like, you could go plus 1/3. Having said that, let us continue to look at these setups, and we may find better ones. We may find ones that are closer to the green zone with great candles and great reward risk as well. Certainly, this is not a 10 out of 10 setup for me. Okay, plus $10. Actually, I didn't even think about that. $10 not that far away as well. Okay, so good if you've got them. I'm not sure how much in them if you don't. Okay, let's keep moving. So yes, there's an element of assessing each setup in isolation and on its own merits, and then there's an element of assessing it against everything else. So no complaints here. Proximity to 200 might be a little bit of an issue. Looking out the corner of my eye, it is blue sky. Okay, so only that round number there at 200 to deal with. Again, ideally we're in a bit closer to the light green zone, and you can see there are lots of opportunities to do so, which unfortunately, whilst navel gazing is still relevant, because I want to show you what the setup looks like, and even there. Okay, so as long as you're okay with the proximity to 200, yes for me, plus 1/3. Everything else is exemplary. I can't fault anything else on this chart in any way. It's the only thing, literally the only thing, is the proximity to a round number. Okay, and you decide how important that is to you. Let's try and find something a bit closer to the light green zone. FSTR. This is from Jason. Slightly closer, still has had a bit of a pop. Love this candle here. Love this shallow pullback. This candle is still good, and Friday's candle is perfect. So 100% yeah, plus 1/3 from me. No complaints. Full risk position. If you've got it, let me just do the due diligence here. No, there's nothing there I need to worry about. If I can't see it on that weekly chart, I don't need to worry about it. It looks even better on the weekly chart, mind you. So that's a yes for me, plus 1/3 there. I don't think that's too far from, no, it's not too far from the light green zone. But let's still see if we can find something a little bit closer. But that is still a top setup, very close to 10 out of 10. Let's go to EPAC. EPAC. This is quite close. Yeah, quite close. It's perfect on everything else. This is 10 out of 10, assuming there's nothing in the corner of my eye, and there isn't. 10 out of 10. 10 out of 10 setup, Jason. No complaints. I'm not sure what happened there. We've gone to the monthly chart. I didn't want to do that. Go to the daily chart so I can type in plus 1/3. Looks excellent. I'm going to say the best setup I've seen today. Let us go to NFG, which looks good. It's more of a turnaround setup. Clearly, you can see how my trend ribbons. It's almost like they're not. A stock isn't allowed to go up until it's dealt with by trend ribbons, isn't it? Like it's just. I'm sorry, but you're not allowed to go up. Look at this here. Look how well it repelled the price. Sorry, but you can't go up. Oh, okay. Now you can. Let me go to the default zoom. That's looking much better now. I like the look of that. I am mindful that there is a point of supply here. Okay, so let us draw that in over here. And you know, so it could be a bit of a broad one. So we're actually in it right now, I reckon. We're in it right now. Let's go to the weekly chart and see what else we have to deal with. There's going to be a little bit of a zone here, probably, like that old point of demand acting as a point of supply, sort of somewhere in there, and then somewhere up here. And this is not a bad thing. This is just part and parcel of turnaround setups. Okay, so you go, oh, why would you ever bother, Carl? Because sometimes you can make the reward to risk work, and you want that mix of setups. Look, I think it's very good. I'm not sure if it's going to get my money over some of the other ones we've seen, just on the basis of where it sits in the trade craft. But yeah, I don't mind it. I don't mind it. I'm loath to say don't do this one, because I bet you that'll be the one that's the best trade out there, because it's got everything else going for it. It's got everything else going for it. Let's go to SEM, which I think Perry had as well. Select Medical Holdings. So if Jason's got it, Perry's got it. It's got to be good, and it is good. Magic big white candle here. You see the white candle, just buy it. It's edging into dealing with that point of supply. So no surprise, it's losing a little bit of momentum here, but look at it's still printing white candles. And once it gets through here, there's a little bit of a zone up here, probably into about there. And then obviously next one up, but this is the relevant one. And again, we just, it's more of a turnaround place. So we're grappling with how whether it meets the tradecraft criteria, and it's probably going to struggle a little bit, given we don't have a lot in the ways of little dinks, little points of demand to set some protective, exits, or at least plan our exits from. But it's epic. There's every chance it'll get into that big zone. So what is Carl saying here? I don't think Carl said anything. Carl's trying to dodge the question a little bit. Again, I think the answer to the question is, where does this setup sit among the other ones we've seen? And I have to defer that to you, to your judgment. I can point out to you these if there are potential issues, and tell you to think about these things, but ultimately it's you that needs to make that call, I guess, and then gain experience from making those calls rather than just listening to me. Out the corner of my eye, we do, again, it's more of a turnaround setup. It's had some volatility through that area, hasn't it? Let's draw, there's definitely a zone here. There's definitely a zone here, and then there's definitely something up here as well that we will need to contend with and have to work through some supply there. So when I look at it here, look at it just bounce off that long-term uptrend ribbon. It's not our first time at 15, so probably not a big deal, but there still will be some selling there. So again, ditto. On the basis of the setup, I would write 1/3 on this immediately, but then I get to the tradecraft and I have to say, well, I'll leave it to you to compare with some of the other ones we are going to see tonight or have seen. Going up the list, we're very close, ladies and gentlemen, I know, because on the way down we didn't see many US ones. They were pretty much all Aussies, so I know that I'm not going to see many on the way back up. ADMA, I think it was. I lost my place, which sucks. There's a lot of stocks on the screen here. Okay, I can't see it. There it is, ADMA. This one's from Adonis. Thanks, Adonis. We're going to go here. I wonder if that's out. If this is the first time we're at $10. I don't think it is, but it's the first time we've been there for a very long time. Let's have a look. No, it's not the first time. So I'm not worried about $10, and that's years ago. I'm only going there just to see if $10. If the first time at $10, it's a problem. If we've been there before, it shouldn't be as much of a problem. And the reason why this is important to me is because I'm seeing what that reward to risk is. So I'm okay with it. A huge gap. Could have closed a little bit better today, but I'm not fussed about it. It's just, when you put the gap back in, it's for all intents and purposes closing at the high. It's very close to it. So it's a yes for me. I think you want to have some skin in the game here, even if it's just to have 1/9. I did not mean to write 1/9. Sixth or whatever. I mean 1/3. It's up to you. But if you felt that, it's gone up, it's had a big gap up, I'm a bit concerned about it, it's far from the light green zone. If that's you, that you're saying those things to yourself, then if it makes you feel better, then lower that risk to get some skin in the game, because gaps are good, gaps aren't bad. You've got to stop looking at a gap going, that's gone up too much. You've got to look at the gap and go, people really want this thing. Maybe I need to want it as well. CWT, Curtis Wright, not even close. California Water Service Corp, lots of stuff going for it, more of a turnaround play, but just concerned, Adonis, about this area here, and I won't do the trade graph because we're just so close to it that maybe we can't make the reward to risk work. But if it gets into that zone, has a little bit of a pullback, then that changes things. But your next level's up there again, so there's a fair bit of work I think that one needs to do. We're trying to find the ones with the least amount of work required. That should make our lives easier. We're going to Perry for our last batch. So 4 after this one. Yes, for me, no complaints there. We go to weekly chart, no complaints there. It looks even better on the weekly chart. This price action's awesome. So plus 1/3 for me on this one. No questions asked. That's a $775 stock. So hopefully you're trading on a platform where you can do fractional shares. Maybe for some people, $775 is a big bite. But if it's not, then 1/3 risk coming on for Costco. We all know what they do. CASY, which is Casey General Stores, same business just about, isn't it? And looks just as good. And I do like it when the whole sector is running. But just also keep in mind, if you're buying 2 stocks in the same sector, are you really adding 1/3 or are you really adding 2/3 risk? Just keep that in mind. I don't mind it, but don't go overboard in a particular sector. Okay, that's an amazing chart, and I don't think we're going to find anything here. It looks even better on the. So we are nudging, if at 10 out of 10s on these. EPAC, which I'm pretty sure we saw before. That was one that Jason had also, and I can see I've written 1/3 on there, so that must be the case. So plus 1/3 there. I think I actually said that was the perfect chart, didn't I, at this stage? And BAH, so great minds thinking alike there. BAH, which also looks very good. We'll go to the weekly chart to see if there's, no, it looks even better on the weekly. Looks even better on the weekly chart. No complaints there. And again, if you are of that mindset that you're looking to increase the risk in the US, then Perry's giving you some great looking charts. Now, Perry can't see the future. I can't see the future. Jason can't see the future. Tomorrow could be the top that we all talk about for the next 10 years, but it's not evident in the charts that we're looking at here. Okay, but understand, we can't see the future. GoDaddy, the website domain registry, which looks fantastic as well. And I reckon we will have some history here. I reckon this, I'm mistaken. I reckon if I go, do I have to go monthly to find it? No, that is all blue sky. Like, this has never been higher, you can see from listing. So that is even more attractive to me, and that therefore makes it also plus 1/3. Now I have to remember, this is why my scratching disappear every time. If I don't save that, that's the frustrating thing. When I draw an AMI broker, it remembers my drawings without having to do anything. Here I need to click that button every time. So I have to literally go back and click the save every time, otherwise my markings will go. And that's it for today. Deep breath, holy moly. Keep calm and follow the trend, everybody. Let me go back to the PowerPoint presentation. We might next week, if we can just limit ourselves, and I always forget to say it, but I'll remember to say it next week, if we limit ourselves, dare I say, to 3 at most per person. Okay, I think that's fair for everybody, and it means that I won't be here until nearly 9 o'clock my time, but God knows what time it is wherever you are. Okay, back to the all-important disclaimer, which I must read before we go, which says that everything we've discussed tonight is general information. It's just information. It has not taken into account personal financial circumstances, objectives or needs before acting upon any of that. Consider it carefully or seek the help of a financial professional. Trading and investing is risky. Markets go up, markets go down. They might not go the way you want. You could lose money. And if you do, it's your fault because you're in charge of your money, not me. On that cheery note, it has been a pleasure chatting with you today. All the best for your trading and investing until we catch up again. Bye-bye for now.